Hello, it's Robert Miner with Dynamic Traders Group with today's DT 5-minute update and trade strategy. I'm sure it's going to take a little more than 5 minutes today because I'm going to go through quickly a whole bunch of markets instead of focusing on one or two because several markets are in interesting positions to develop some trade strategies. So regardless of whether you trade the markets that I talk about or not, you can use what you learn for other markets and other time frames. And if you want to get more comprehensive education about practical trading strategies, check out my book, High Probability Trading Strategies. You should have that fantastic bit of education for very inexpensively. And follow us on Twitter and YouTube, although you're probably already doing that since you're listening to this video, either on Twitter or YouTube. Let's get started. First market we're going to take a quick look at is crude, because I've done some charts and comments and all on crude over the last week or two. In the this past week, we were in an almost ideal position to complete a weekly low in crude. The weekly momentums reached dual, look back oversold. This past week was the 2-week time span, which had a high probability of making a weekly low based on some different time frames of lows to lows. However, we didn't make any kind of reversal this past week. We really need to close above the close of the prior week. It was complete. Here's the daily data. So we had on Wednesday had what we call dual look back daily momentum bull reversal. That was the indication when weekly momentums were oversold and in a time period and some support levels. When the daily shorter time frame daily makes a reversal, that's our setup for long. And the following day on Thursday, we took out the prior day's high and closed higher for a great setup for a long trade with very minimal capital exposure. I mean, really minimal capital exposure for a potential weekly trend of several weeks net bullish. However, we haven't had any follow through to that yet. So we maintain our stop just below last week's low, that's last Tuesday's low, on the long trade. And one of the reasons I think it might roll over here and make a new low this coming week before it completes this weekly low, and that's because following the daily momentum bull reversal, there was never follow through on the upside. And when you have a momentum bull reversal, but you don't begin an impulsive trend in that direction, more than likely we're just making a correction before we make a new low. So that's a possibility this coming week. What I want you to be aware of is if crude does make a new low next week, if it does roll over, the next daily momentum bull reversal will be made with the weekly momentum's dual look back oversold. So it'll be another really low risk, low capital exposure setup to get in the long side. We're really near a weekly low. If it's not complete, more than likely it's going to be complete next week. So we want to look for setups with low capital exposure to get long the crude market when we make these dual time frame reversals. Well, here's soybeans, and again, this past week, the weekly momentums reached oversold. We made a nice snapback reversal week with a higher close. Have we completed a weekly low? Possibly. And it was a good position, at least from my point of view, to take a long trade. That's exactly what I did in the futures on Tuesday after we had this reversal day on Monday and the dual look back daily momentums made bull reversals. And Tuesday we traded above Monday's high and we closed higher. We actually closed above it. So that was a fantastic setup for a long trade with just really small capital exposure for the potential of a weekly low. But look what happened. We just went sideways for the next 3 days, and in that time period, the daily momentum reached overbought. This is almost like crude. More than likely, beans are going to roll over, make a new low. It's going to fake everybody out, and that's going to be the final low, probably next week, before a weekly low is complete. So if I get stopped out, and I got my stop up now above Tuesday's low, just I'm just a few cents capital exposure on this. If I get stopped out and if beans should go sideways to down into next week, the next daily momentum bull reversal will be another setup for a possible weekly reversal as well. So I'm going to be looking to go long again. So again, we identify the conditions when a market is near a higher time frame reversal, then we go down to the lower time frame to actually execute into the trade. This is the euro, and I feature the euro a lot in our little tutorials and updates because I trade it myself very frequently. And about 10 days ago, we made this nice daily momentum dual look back bull reversal. And the next day is when I went long, when we took out the prior day's high and we closed higher on the day. And of course, that following Friday, the next Friday, I was looking like a genius, a really timely trade. And I did actually a series of tutorials that included this trade and trade management right up through the end of this past week. Well, of course, there's no follow through in this upside. And while I didn't lose money on it, actually made a decent profit on it, but not nearly as much as it looked like it was going to be after this day and that Friday when it made that big up day, and the daily momentums weren't even overbought. So that's why I did a tutorial for our subscribers and DT owners this past week. It's actually a 3-part tutorial to show how we adjust the stops once we're in a trade and it moves in our direction. So I did get stopped out, made a decent profit on it anyway. And where are we at right now? Well, once again, we're back in a position to complete a pretty significant low here this coming week, probably at the latest by Tuesday. There's some time factors on Tuesday. Including the 100% alternate time projection. This last decline was 13 trading days, and Friday was 28 trading days down. So Tuesday will be 30. We're also in the high probability end of wave 5 target zone, and I've got tutorials on that for subscribers. How we, when we do have a clearly defined 1, 2, 3, 4, and 5, we made a new extreme. We can calculate a relatively narrow range and with a very high probability of completing a 5-wave decline. So more than likely next week we're going to complete wave 5, a weekly low, and then we're going to be sideways to up for at least 3 to 4 weeks. So we want to develop go long strategies for next week for when we make a reversal, and their daily momentum eight's already gotten oversold. So even that's telling us we're probably within a couple days of completing this decline, making a daily low, which is going to coincide with a weekly low. This is the ES, and boy, we had a great setup here about 2 weeks ago for potential weekly high in the ES and the other stock indexes, and this outside bear continuation day on Friday, which was a go long setup, and then it was looking real good for several days, especially after this day, which was the following Friday, another big wide range day to a new low, and it allowed us to adjust the stops on the short position to a little better than break even for small profit, at least, if we should get stopped out. Well, it turns out that's exactly what happened a couple days later, is we got stopped out, actually had a small profit on it, from small profit to break even for practical purposes, and now we've continued to make a new high. This is just a warning for you that don't get too bullish with this new high. Weekly momentums continue to be bearish. They're not oversold, so the momentum trend is actually net bearish, and it should resume next week at the latest by next Tuesday, February 11th. Our daily momentum already made a bear reversal on Friday, so I would not be surprised if we've already completed this top. We got to trade all the way down with a close below 32.8975 to confirm the weekly high and continuation of a bear trend to test and probably exceed these lows. Again, it's not going to be a big bear market, but it should be at least another 2 to 3 weeks of sideways to down and net bearish trend. So just be prepared for that, particularly if we make a close below 32.8975. So there's one other market I'll comment on. I'm not even going to bring the chart up because I've commented on it many times in the last few weeks, and that's gold. Gold has rolled over as anticipated. Gold, silver, and the GDX all should be net bearish for probably another 2 to 3 weeks into the end of February before they complete their weekly bear trend that they're in right now. So it's not a time to be buying gold, silver, GDX, but that time is going to come in 2 to 3 weeks. So be prepared for that, because it's going to be, I think, a good one which is going to drive those three markets eventually to new highs in the weeks and months to come. So certainly, if you're a subscriber to our report, we'll keep you up to date on that every day, like all these markets we just talked about and others, for practical analysis, trade setups, and high probability, low capital exposure trade management. That's it for today. Have a fantastic weekend. Take care.